let's look at AMC Entertainment. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So AMC, it's definitely been in the news in a huge way. It is one of those meme stocks. I have put it under legacy media. So the average performance here is substantially outperforming the S&P 500. So if we go here, we have newspapers, book publishers, TV conglomerates, and movie theaters. So I have put, AMC Entertainment in the movie theaters subgroup. And we do have a 2,854% here from the low, minus 22% away here from the 52-week highs. So we have seen a very, very, very substantial move here from the low. The issue, as far as further upside goes, is that the market cap has increased very substantially. But that's something we will go into. So here's the website. So AMC Theaters delivers distinctive and affordable movie-going experiences throughout the United States. We maintain a significant presence in the top 50 DMAs, including the number 1 or 2 market share in each of the top, The company operates 22 of the 50 highest grossing theaters in the United States, including 4 of the top 5. So 1,000 theaters, 11,000 screens. Yeah, definitively, it's a company that's been in the news in a very, 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 very big way because of, the short squeeze we have seen. So the key thing is to sort of know why it happened, because that can give us a bit of a hint about any kind of future developments. So the key thing to be aware of here is that so the stock was deeply depressed price-wise. So it had gone from the high over here to a low here, and that was minus 94% pullback. And through the magic of percentages, when you go from that low level to a higher level, you can get very substantial moves. So here we are approaching 900%. So let's actually do some math here. So here you have, approaching a 900-ish% move. From that high to this high is only, quote unquote, 250-ish%. So you can see how substantially, the percentages differ. Because when you look at the chart, it certainly seems like this third move here, this seems to be much bigger, but no, this one here was much bigger. So if you bought low here and exited here, you would have a much bigger gain than those who bought the breakout. So this is one of the illustrations in which waiting for a breakout, it's not really ideal. So having a breakout, it's a technically bullish sign. But the problem is the way the math works, because when AMC is at this very low level, the market cap is much smaller. So here the stock is around $2. It's currently at over $56, and that means a very substantial difference in market cap. It means that the move. In order for AMC to double from the current level, it would be, it's far more dramatic. It takes a lot more force to do that than from this super low level. So that's something that's very important to be aware of when you look at videos that are like, oh, AMC is going to go up 1,000% from the current levels. Because that is frankly just extremely unlikely. So the next AMC-ish candidate or a GameStop-ish candidate is not a chart that looks like this. It is a chart that looks like this. Okay, a stock that's in a deep downtrend, very undervalued, hated, massive short positions. People do think it's going to zero. Those are the stocks that can make the next 1,000+% move. At this point, it's very, very late. So it's one of those key things, in finance, you want to buy low, sell high, buy the rumor, sell the news. And, people know about AMC at this point. A very huge majority of people who want to play AMC have done it. Maybe there are some latecomers that will push it higher, but yeah, it's late. Looking at RSI, PPO, extreme readings, so definitively readings that you could consider risky, certainly. We had a record RSI here before the pullback, and we have seen a pretty substantial pullback from the highs. So if we do measure, so let's say that you accidentally bought here, then you would currently have, minus 22-ish loss. So that's something to be aware of. From a more bullish perspective, you could argue that we do have support here at the 20-day moving average. We are consolidating. So yeah, sure, you could have a bit of a breakout from a consolidation, but the problem is still that due to the current market cap, it takes a lot more money to move AMC up 100% than what it was down here. Moving AMC from this low level here, around $2, doubling the market cap, it doesn't take that much. I mean, it still would be, much smaller than it was from the previous highs. But now, it's sort of like the bulls have sort of gotten themselves into like a messy situation. Looking here at the seasonality, you see here that July, August, September, October, there definitely is a strong weakening in seasonality for the coming period. So that's something to be aware of. Those are just basic realities of this stock. Going here to Finviz, they draw trend lines, resistance here, support. Stock is, just far away from the price targets. Like huge, I mean, it's just, yeah. So that is obviously not a bullish sign. Going here to SAX, number 3 hold, F value score, F growth, F momentum, industry rank bottom 30%. So the current market cap is 26.17 billion US dollars. So if, the stock is going to go up, 100% from the current levels, we are talking all of a sudden about, a 52 billion market cap. If it was to, if you multiply it times 5, then you have a 131 billion market cap, 26.17, and if you time it by, 10, you get, a pretty astonishing $262 billion in market cap. So just to sort of get the picture, so going up, times 10, $262 billion in market cap, then we're talking about, it would be bigger than Coca-Cola and not Walt Disney yet, but bigger than Nike. Is that like realistic? I think that would be quite a stretch. Even if we take, so let's say that it's going to go up times 4, $105 billion in market cap. It would be bigger than Walgreens, starting to challenge, 3M, Caterpillar. I mean, so I think that you sort of see the point yourself, is that it was easy for AMC to make the big move from a very low level to the magic of percentages, and also that, the increase in the stock price and its effect on market cap, it required far less money. In order for AMC to make, to double from the current level, to go up 200%, 300% and more, it requires an absolutely enormous amount of capital, like huge, as we saw here with the calculator. There's like an absolute monstrous amount of money that has to come from somewhere. It means that, and are mutual funds going to sell out of, Coca-Cola and Nike and such to help fuel that? You need, it's not just going to happen. So yes, even though obviously it's been very, very dangerous to short AMC, clearly, however, at this price level, it is very difficult. It's almost like physics. It's very easy to push a small ball, but the bigger the ball becomes, the more energy is needed to push that ball. And now AMC, due to the increase in market cap, it is a huge ball. You can't like meme and tweet this one, to double or triple anymore. So yeah, I do think it's time to consider bearish opportunities, but definitively, be careful.